Hi all, my name's Carter with CB Home Solutions, and you're probably watching this video because we had a conversation. You're interested in learning more about our terms offer option when you have a existing mortgage in place. So in this video, I'm going to explain exactly what you need to know, the nuances of it, the risks of it, and ultimately why most homeowners decide to go this route versus possibly listing it with a realtor or going some other route with their home sale. So I will explain that here in just a second. But if you have any questions after watching this video, of course, connect with one of us here on the CB Home Solutions team. But I look forward to having a conversation with you in the near future if we have not already. And everything that I'm going to explain is 100% legal. We've done it numerous times in the past, and we have all the legal documentation to successfully do this, of course, in the future. So let me share my screen as we walk through this. I put together a little bit of information. I will even show you an example property that we are closing on in 5 days from now. So it gives you an idea that we are currently actively doing this, of course. And it's very, very convenient for a lot of owners. So I believe you can see my screen. Yep. Let me just make my side a little bit smaller so I can explain this to you all. Hopefully that doesn't screw anything up. Perfect. Okay, so a terms offer with a mortgage in place. Obviously, we came out, we presented you with multiple different offer options. And if we haven't done that already, that's generally what our appointments look like. But if you decide to go the terms offer route while you have a mortgage in place, because that's the highest dollar amount that you could receive in your pocket, you want to sell your house, but you are worried you might not have enough equity to possibly list it on the market with a realtor, or you just don't want to list it with a realtor, which is extremely, extremely common. And I'm just letting you know there is another route to go. But equity, for those of you that don't know, is the difference between what you owe on your current mortgage or what's owed on the house and what the house's current market value is. So say the current market value is 200,000, you owe 188,000, you technically have $12,000 in equity on your house. So like I said, you have multiple options when it comes to selling your property. We have the cash offer option, the partnered option, the terms offer option, or you can list it with a realtor. You, of course, will get the highest dollar amount always, or I shouldn't say always, in most scenarios and situations when you list it with a realtor, but there is a caveat to that. You also have to pay 6% listing commission on average. That's generally a good rule of thumb. Let me just make sure that you can see this. Okay, you'll have to pay a 6% listing fee or listing commission, which pays both buying and selling parties. And then roughly speaking, about 1 to 2% in title transfer fees, warranty transfer, or title costs, warranty deed, Wisconsin transfer tax. You have recording fees. You have all these different things that the title companies charge to transfer the house out of your name. And then if there's any repairs or appraisal requests, you're going to have to also deal with that. And then the additional hassle of the time spent on the market showing your house, anything like that. So roughly speaking, you'll pay about 7 to 8% of your total sales price in fees and expenses. So if your house is listed at 200 grand, you'll minus the 6% commission, minus the 1 to 2% miscellaneous fees. And it means 200 grand minus $12,000 in real estate fees, the 6%, 2 to 4,000 in title fees. We'll say 3 or 2 in this scenario. We'll just do it on the low end. So you're up to 14,000 in fees, minus we'll say maybe $500 in repairs. So that leaves you with 185.5. If you were to list it at 200,000 with a realtor, which means, like we had discussed before, I told you owed 188,000, or that's what you told me. If you only net 185.5 and you owe 188, you are stuck bringing $2,500 to sell your house. Not too ideal of a scenario. Whoop, let me just click out of there. Shoot. Okay. So that's not an ideal scenario. And most people will not be able to afford to do that because you get $0 at the end of the day. What is the point in selling your house other than wanting to downsize or move somewhere else or move into a rental or what have you? But what if I showed you a way that you could walk away with 5 grand in your pocket? Like there's no catch to this. There might be some caveats, but this is a legitimate way to show owners how to make money on a home sale, um, regardless of what's owed. So let's say you want 5 grand in your pocket. You would, instead of bringing 2,500 to sell the house, you want 5,000. So here's how: you owe 188 on the place. You want $5,000, which technically means you need to sell it for 193 if you don't have to pay any transfer fees, title costs, all that crap, which comes with every single home sale. But on our side, we always pay that for homeowners. So you want 5,000, you need to get 193,000 in your pocket, or 193,000 sale price. So in our terms offer that we provide to owners with mortgages, we can get you the money in your pocket in most scenarios. Like, we can provide you with an offer that will net you some money in your pocket, but it has to make sense for us. We have to get a return on investment. And with and these are if houses need renovations or whatever the case might be. If we buy it cash, we might be at 150 grand. That's obviously way too low. If we buy it with a partner, maybe we're at 160. That's still way too low. If you list it on the market for 200, which is above what you owe, you're still not going to net the same dollar amount. You're going to have to bring money to closing. That is not going to be enough. But the terms offer, the 193, should make you 5 grand. Here's how. So you have a house, your current mortgage, $188,000. You pay $1,300 a month, which includes taxes, insurance, in an escrow account. It gets deposited in your escrow account. So what we propose doing is we pay this. We pay this, plus we pay you the $5,000 in your pocket. That's it. There's no catch to it. Your current mortgage, we will take over responsibility for that. We will make the payments every single month on the property, for the taxes, for the insurance, and we will give you the $5,000 in your pocket. Now, I know you have a lot of questions. There's a million different things going on in your brain if you're watching this. So here's the catch. It typically works best for homeowners who are moving into a rental or who do not need to buy another house within the next 12 months. Just because of some of the stuff on the underwriting side, if you were to get a new loan, like this loan is still active. It is still technically in your name, but we just take over responsibility for paying it. So you have no responsibility with that anymore. So why do we do this? Because if we brought $193,000 in cash, that is a heck of a lot of money. We would have to make a return on investment to be worthwhile. That's why our cash offer and our partnered offer are so much lower. The return on investment needs to be there. We don't do this business for free. But if we were to only need to bring $5,000 and you get paid and we get paid, we can make sense of it. The only person not getting paid off, because you're getting your 5,000, we're getting a house, as you can see right here, but the bank doesn't get paid off. But ultimately, they gave you the loan in the first place because they make their money by earning what everyone calls interest. And the actual terminology is interest. So that's why everyone calls it interest. So the bank is ecstatic because they still make their monthly interest on your mortgage that they borrowed you money for. We pay that mortgage every single month. You don't have to deal with any repairs, any maintenance, any issues, any of the crap involved with home ownership anymore. You got your 5 grand. You can move to a rental. You can move out of state. You can move wherever. We just have that responsibility of paying your mortgage every single month. Now, of course, there's the apparent risk of what if you want to buy another home? What if we don't make payments? What if the bank calls and says, "Hey, John, your loan is due. We want to collect on all the money." What if we get abducted by aliens? So let's address all these. If you want to buy another home, like I said, it technically needs to be about 12 months afterwards. But what we do on our side is we set up all the loans with a servicing company. So it's not like a traditional rental where lenders look at it as there's a certain amount of debt, like your debt to income ratio. These are all terminology that lenders utilize when they're providing you a home loan. By giving or by having a loan serviced by a loan servicing company, we are able to mitigate most of that debt that would accrue against you in the sense. Or we may even pay off the home sooner rather than later. The next issue that comes into is what if we don't make the payments? Well, like I just said, we have a servicing company automatically pulling money from one account to the other and paying your mortgage. You might say, well, Carter, what if something happens to you? What if you get abducted by aliens and you don't make the payment? That is an apparent risk. There is a definite risk there, but we have business partners. I have more than one business partner who would be responsible for continually making that payment, keeping the business operating. It does come down to trust. There has to be a certain level of trust between one party to the next. Because if there's not trust, if there's not transparency, then it's never going to work out. Like those are the caveats to this. It has to be a mutually agreed upon thing. And if it's not, maybe this isn't the right strategy for you. But over the last however many years since 2015 and the 130 plus owners that we have helped, we have a very strong reputation when it comes to doing business. And our reputation is something that I want to protect for the next forever because my reputation means everything. We don't want to go down the rabbit hole of basically screwing people over, taking advantage of owners in situations that realistically shouldn't be taken advantage of. Some companies operate their business off that, but not us. That's why we have such a strong reputation. So there are apparent risks to this, but again, it's a trust thing. It always comes down to that. And our track record speaks for itself. But the last thing, what if the bank calls the loan due? Then we just pay off the loan. Or there's other ways around that, but in the grand scheme of things, we have the cash, we can pay off the loan, it's done and over with. So there's multiple different ways why we decide and why we love going this route. What our strategy with a property tends to be is we might keep it as a rental. We might do a short-term rental like an Airbnb sort of thing or rent it out on VRBO. We might rent it to nurses or doctors or healthcare workers or people here traveling to the local area that they need a furnished rental. That's our strategy. And you could definitely do this yourself. And let me quit sharing my screen for a second. So you could definitely do this yourself if you truthfully wanted to. But what you don't mitigate is the repairs, the maintenance, the upkeep that you have to continually do on the property. By selling it to us, by going this route, you will get your cash and then you can just walk away and you never have to worry about it again. But if you want to own rental property, then I would suggest you just do this for yourself. That you rent out the property, you furnish it, you do whatever. But if you truthfully don't want to do that, you don't want anything to do with the property anymore, you're planning on moving into a rental or out of the area, you don't want anything to do with it, this might be the best option for you. So if you have questions, if this is something you're interested in pursuing, just shoot us a message or connect with one of our team members who had originally spoke to you. I look forward to having a conversation soon. I can walk you through this in a little bit more detail if you need me to. Actually, 1 second before I end this video, let me present you with the scenario I told you I would. Shoot, I'm trying to find it right now. Screenshot. Okay. So you guys, here is a scenario property. So June 15th, 2023. I'm recording this on June 16th, 2023 to give you some context. You can see here, we are buying a property in Oshkosh, Wisconsin. Title company we use is in Appleton. I just blurred this stuff out. So Century Investment Group is a business owned by us. Pretty basic there. That's our office address. So you can see here, sale price of the property, $137,000. Well, I should just, subject to finance is the technical terminology for this. This is what's owed on the mortgage, the remaining balance that we are assuming that we are taking over payments or responsibility for paying, $131,002.24. They're escrowing for a final water bill, $200. This is the money the owner is getting in their pocket. $5,816. So if they were to listed this for 145, they wouldn't have even netted that much. If they were listed this for 140 or anything less, they just didn't want to do that. They wanted this quick and easy. They wanted it done in 2 weeks. They just wanted a quick, easy solution. So, like I said, there's always scenarios and situations that we can help out with. I'm going to stop sharing. If we can help you, I would love to. I would love to have the conversation. Just reach out to us, of course. We will talk to you soon. Enjoy the rest of your day.